Today, we are diving into one of the most powerful, yet kind of invisible forces in the business world, network effects. Seriously, by the end of this, you'll see exactly why this one concept is the secret sauce behind some of the most dominant companies on the entire planet. So, let's get right into it.
To really get our heads around this, let's start with a super simple question. Just imagine the very first telephone ever made. What would make that amazing, game-changing invention, well, completely and utterly useless?
And the answer is, well, it's almost funny how simple it is. A telephone's real value isn't the plastic or the wires, it's the number of people you can actually call. If you're the only person with one, it's just a paperweight. But with 1 billion users, it connects the entire world. This single idea right here is the key to everything we're about to talk about.
And that brings us to the official term for it, a network effect. It's when a product or a service gets more and more valuable as more and more people use it. The thing itself doesn't even have to change, but its value just skyrockets as that network of users gets bigger. It's such a simple idea, but it is incredibly powerful.
So, okay, why do investors get so incredibly excited about this stuff? Because a network effect isn't just some cool feature. It's what builds a nearly impenetrable economic moat around a business.
The legend himself, Warren Buffett, made this term famous. An economic moat is basically a durable, protective barrier that shields a company's profits from competitors over the long haul. And you're about to see network effects build the widest and deepest moats you can find.
Now this is where the real magic happens. It's a self-reinforcing loop, like a flywheel that just keeps picking up speed. More people join, that makes the service more valuable for everybody already there. That extra value then pulls in even more users, and this thing starts spinning faster and faster, creating a huge barrier that competitors find almost impossible to break through. I mean, they can copy the app, but they can't copy the network of people.
So this incredible loop doesn't just make a product popular, it gives a company what I like to call financial superpowers. Let's break down the 5 biggest ways that these network effects translate directly into serious financial strength.
All right, first up,
Pricing power. Think about it. When your customers basically can't leave because their entire social circle is on your platform, you have some serious leverage. Look at WhatsApp. If they started charging, I don't know, $1 a year tomorrow, would you really leave? Probably not, right? Because leaving means you're cut off. That gives them huge control over pricing.
second, a much lower customer acquisition cost. A company with a killer network doesn't need to blow a fortune on advertising. You know why? Because its own users become its best sales team. You invite your friends, you share stuff, and you grow the network for them, for free. All that organic growth goes straight to the bottom line as higher profit margins.
Which, of course, leads to number 3.
High switching costs. This is all about what we call stickiness. When you decide to leave a social network, you're not just uninstalling an app. No, you're losing your friends, your photos, your entire history, your digital identity in a way. That makes it really painful to switch to a competitor, which results in amazing customer retention.
Number 4 is where things get really dominant.
A winner takes most dynamic. You've heard the saying, the rich get richer? Well, in these markets, it's absolutely true. The network with the most users is, by definition, the most valuable one. And that just attracts even more users. It creates this gravitational pull where one company often ends up just dominating the entire market. For companies like LinkedIn, their massive scale is the product.
And finally, the ultimate payoff.
Revenue compounding. See, as the network gets bigger, value creation actually accelerates. Every new person that joins creates a whole bunch of new potential connections. This means value and the revenue that comes from it doesn't just grow in a straight line. It can grow exponentially. It's like a snowball rolling downhill, getting bigger and faster, creating the kind of returns that build legendary companies.
Okay, this all sounds pretty amazing in theory, doesn't it? But let's make it real. Let's look at how these superpowers actually play out in some of the biggest companies that you probably use every single day.
And this table just lays it out perfectly. Look at Meta. More users means more photos and videos, which keeps everyone scrolling, leading to insane ad revenue and customers who never leave. Or check out Visa. The more stores that take it, the more people want the card. And the more people have the card, the more stores have to take it. It's a perfect loop that gives them a duopoly with unbelievable pricing power and, get this, over 50% profit margins. Every company here has turned its network into a financial fortress. So now that you get the what and the why, let's give you a little toolkit. Here's how you can start spotting and evaluating these powerful network effects for any company you might be looking at. First thing to know, there are two main flavors. You've got direct network effects, where more of the same type of user adds value, think WhatsApp. More friends on it makes it better for you. Then you have indirect effects, where two different groups make it better for each other, like Uber with its network of drivers and riders. Knowing which one you're looking at is step one.
Next, you got to ask yourself these key questions. How hard is it for a customer to leave? How sticky is it? Is the network effect local, like Uber's, which has to be built city by city? Or is it global, like Facebook's? And maybe the most important question, can you actually see the proof in the numbers? A real network effect should show up as high profit margins and super low customer churn.
Because at the end of the day, here's the bottom line. A true network effect is a financial multiplier. It's that simple. It means revenue grows way faster than costs, it means customers stick around forever, it keeps competitors locked out, and it's exactly why the stock market gives these companies such high valuations. It's the ultimate sign of a high-quality, durable business.
And that leaves us with one big question to think about. As you look at all the new, emerging companies out there, which ones do you think are quietly building these self-reinforcing loops that could become the next unbeatable economic moat? And hey, speaking of that, I'd really love to hear your thoughts. Before you go, drop a comment below and let me know which stock or which sector you think is building that next great moat. I really do read all of your comments. On your analyzer, we don't just talk about stocks. We really try to explain and teach every one of these fundamental concepts so that you have the tools to analyze companies yourself. So for more of this kind of deep learning and market insight, make sure you subscribe to the channel and don't forget to press that bell icon. Thanks for watching, and I'll see you in the
Disclaimer. Educational content only. Not SEBI registered. This is not a buy/sell recommendation. Invest at your own risk.